All right. Hello, evening, everyone. If you can hear me right now, leave a comment and we will get the session started and going. Welcome to Portfolio Building on Fridays with Terence. Okay, now this is another week where I'm going to talk to all of you about what the market has done, how the market has changed, and how we're going to position ourselves moving forward into the next few, I would say, really volatile weeks. Okay, now, hi, Facebook user. Right. Now, can you just please go to StreamYard.com, right? Click on the Facebook button, which approves them, right, to let us see who's commenting when you leave a comment on the screen. Okay. Hi, Jimmy. Hi, Desmond. Hi, City Chai. All right. Now, so if you are a Facebook user right now, or you have never done it before, right, can you see the banner over here on the screen? Okay, it has a link called StreamYard.com/Facebook. Right, go to that link. You can type it out as well. You'll see a blue button, right? Just click on it and that will approve Facebook, right, to gain access to your profiles. Okay, so when you leave comments in this Facebook live session, right, we will actually be able to see, right, that you are the one leaving comments and I could answer to you in a more personalized manner. Okay, otherwise, that's all I'm going to see. You're a Facebook user. Okay, now, so without further ado, okay, I won't be holding too much back, okay, because I've got two boot camps running on Saturday and Sunday. Okay, concurrently on both days I'm going to be attending to different groups. Okay, now, so I'm going to keep it short today, but I'm not going to shortchange any of you. Okay, I'm still going to go through the usual procedures of going through our current positions, okay, and then look forward to what the market is talking about to all of us. Okay, now, so we have the market tumble. All right, this is the SPX, yes. All right, now SPX. Okay, here we go. Now, so we have the market tumbling, all right, about all week. Yeah, all right, now all week the SPX has been pretty weak over here, right? And now we went back up above 4,400 level briefly. Okay, but today, all right, we are back inside and we are back down below the 4,400 level right now. So while the market is holding and is very stubborn right now, okay, but okay, we are expecting no visible turnaround until it probably hits this support, right, at about 4,250, okay, to about 4,220 level. All right, okay, now I would say this is probably the one that is more evident right now. Let me move this. Oh man, as usual, it doesn't want to work out. Yes. All right, now, so about 4260, 4250, that's the last resistance, turn out a break, all right, and then the support was tested before it started running higher again. All right, now, so we are still at least another 50 points on the SPX before there is any possible or visible turnaround. Okay, but there is something, right, that I would like to fill all of your minds about, okay, before I go any further, because I do think that this is very important. Okay, but before I go ahead, let me put out the disclaimer for this session. I will be giving my opinions, I'll be giving my views, I will be discussing live trades that I'll be placing on my model, right, live portfolio that I built with all of you who are in attendance, right, during this Facebook live session. Okay, but by no means this is any form of recommendations. Okay, all right, please take this from an educational purpose. I'm just sharing it with you, right? Do know your risk, right? Be aware of all the risks involved before making any decisions if you want to follow the trades. Okay, all right, now, so let's go ahead. 4260, all right, is the next visible support, right, for the S&P. All right, so we do not see any possible turnaround right now. Okay, that is coming from the charts. Okay, all right, now, so apart from that, here's what I'm seeing over here, right? The main driver of the entire market right now is really this, right? It's really the interest rates. Now, I've said this before, all right, and now I'm going to say it again. All right, why? Because the interest rates have broke out from about the 1.35% level. Right now, how do you read this TNX over here? right now. Although it's reading 14.75 right now, what it actually means is 1.475%, right? Because this is basically the 10-year, right, Treasury index, right? And this is represented in the form, all right, of a percentage, all right, which is the interest rates. Okay, now, so if you want to read this accurately, you should be reading it as in a percentage format. Now, here's what the market is trying to tell you. Right now, I think last week, all right, the Federal Reserve had came out and said they have no ideas or no views of raising the interest rates anytime soon. Okay, but the market didn't react that way, right? Immediately the day after that, can you see? This was the Federal Reserve announcements over here, right? And immediately the day after that, the traders in the market started bursting it up, right? Okay, this is the market traded interest rates. Okay, this is not what the Federal Reserve is putting out. Okay, now, so it all tells you that the market and the traders are anticipating higher rates right now, right? They think it's needed, right? So what they're doing right now is they've pushed the bond prices down, okay, and thereby bringing the interest rates up. Yeah, okay, it's an inverse relationship of bond prices and the interest rates paid, right, in bonds over here, right? So this is something you have to be very clear about, right? And right now, does anybody know? Okay, leave a comment over here. All right, if you're aware of this. Okay, when interest rate starts going up. Okay, when interest rate starts going up, does anybody know which sector, right, which investment sector in the stock market, right, actually gets punished, right, the worst over here? Right? Anybody would like to leave a comment? All right, I'd like to see if anybody is aware of this. Right? Which investment sector or business sector is the most affected, right, when it comes to higher interest rates? All right, if you do, please type it in the chat box. Yeah, I'll be waiting for you. Yeah. Yeah. Thank you very much, Young Boon. All right, now it seems like many of you are aware of this. Yes, all of you are right. It is either the tech stocks or the growth stocks. But the key question is this: does anybody know, or can anybody tell me, all right, why these two sectors are actually affected when interest rate goes up? All right, does anybody know the reason behind this? Okay, why does a higher interest rate, right, bear down on technology and growth stocks? Anybody? Oops. Right? Nobody knows why higher interest rates is bad. Yes, thank you very much. All right. Unfortunately, I can't. Yeah, Jeffrey, well done. Okay. Unfortunately, the first person that came up, I couldn't. No, Daniel, it's not you. Right now, the first person that came up, all right, I couldn't leave a name, all right, because you are represented under Facebook user. Yeah. All right, but the rest of you got it right. Okay. Now, so, Sarah, it's not so much the higher corporate tax. Right, it's pretty much all right that a lot of growth companies, a lot of technology companies, they have been expanding, right, on what we call cheap money, right? So they have been borrowing a lot of money, right, during this period to actually cause the expansion, right? Now, so when interest rate goes up, right, what people expect is higher interest rate payables, right, and indirectly is going to affect the profitability of these companies. And the next part is, right, there is no longer cheap money for these companies to keep using anymore. Right, so I hope you see what's the problem and what's the issue right now. Now, so I won't just say this, all right, because I can actually pull right out a comparison for all of you to see. Okay, now because what I'm going to do right now is I'm going to go to a comparison chart. Okay, I'm going to add it onto my screen right now. Okay, pardon the lag. Okay. Okay, and what I'm going to do over here is I'm going to add up the QQQ. All right. Okay, now the QQQ is basically the NASDAQ representation of ETFs. Okay, it's the NASDAQ ETF. Now, so here's what I'm going to do. I'm going to change the styles. All right, so everything looks. All right, here we go. All right. Okay, now, so the purple line, all right, it's basically the QQQ, all right? Am I right? No. Let me do this. Yes, the purple line that you see on the screen is the QQQ, all right? And then the one that's colored red and green is actually representation of the interest rates. Now, the last time we had an interest rate breakout was actually at the beginning of this year. All right, I'm not sure if all of you realize that. Right, so we saw the interest rates, all right, over here broke up and then started racing higher. Now, can all of you see this? Boom, all right, and then it raced higher. And what happened to the NASDAQ during the same time? Right, can all of you see? NASDAQ went, oh my God, all the way down, right? And it didn't stop really swinging all the way down until, right, the interest rate started to stabilize, right? And now, can you see? We are actually at the initial onset, right, which is like here. All right, now, and that's why I actually do anticipate and expect more, right? A little more sell side in this current market. I don't think it's really done right now. Okay, and that's the issue, right? Because we have just achieved this first breakout move. It hasn't even come back and test the support, right? And right, we have the same thing, right, happening sometime in February, right, when the market did this. Boom, right now. So can you see how similar, right, this breakout is, right? And then the fall. Right now, it doesn't mean that it's the end because we can still have, right, some dips over here, right? And having said that, okay, it's not the end because we still have some really, really high flying stocks, right, in the technology sector that has not, right, been affected by the markets yet. Okay, now let me show you what I mean, right? If I'm going to pull it to Google, right now, if we are looking at Google, if I'm not wrong, this is a 1 year chart. Yes. Right now, despite the recent drop, all right, but Google is still up by almost 80%, right? Can you see the percentage on the right side over here? It is still up by 76%, right, over the last 1 year, right now. So there's still so much room to fall over here, right now. So Google is definitely one stumbling block, right, in the entire market. And the next one over here that we will be looking at, right, is actually Navidia, right? Now, why Navidia? Because Navidia, right, also has been up by almost 50% right now. It was at a high of about 70%, right, before falling off very quickly, very recently. Right now, while many of you think, hey, Terence, what about Apple? What about Amazon? Right now, you'll be surprised to know, right, that Apple has been lagging. Right, Apple has been lagging because Apple is only up by 19% for the last 1 year. Right now, so it's not been the one that's been driving the entire NASDAQ. No, right? Yes, it's been going up, but it's not been flying high like what Google or Navidia has done. Yeah, all right. Okay, now the next one over here, Amazon. Right now, you may think Amazon has gone up by a lot, but Amazon is barely break even. Can you see this? Right, for the last 1 year, Amazon is like break even right now. Right now, so these two stocks, right, are, while they may see some downside, right, but I do not see severe downside, right, in these couple of stocks, or not as much as companies like Google and Navidia. Yeah, right now. So if you're looking at, potential technology stocks that have a big downside, right, I would say, all right, it will have to come from Google and Navidia. Now, why? Because these two companies, right, have yet to really correct itself. And if we get some panic selling in the market, right, which two stocks do you think, right, that the growth investors and the funds will start dumping first? Can you see now? Right, and when they start dumping these two stocks, it is going to ripple through the rest of the technology sector. Why do I say that? First, because Google is not one, but it's two stocks. Agree? Right? And if I'm not wrong, right, please correct me if I'm wrong, but both of their stocks is $1 trillion company. Yeah, right now. So if both of these Google stocks were to fall, right, by 5 or 10% in a day, can you think about what it ripples through the entire NASDAQ index? And not only that, how about the other two, like Dow Jones and the S&P 500? Right, it's going to cause some ripples, right? And the next one is Navidia. Right now, while Navidia, right, is nowhere near $1 trillion company, but you must understand something. Right now, Navidia, do we have the market cap here? We don't have the market cap, right? But Navidia has a market cap of about somewhere along the lines of $500 billion. Okay, but the difference is this, right? Navidia, right, has a much higher implied volatility, right, than stocks like Apple. Right, because if you look at Apple is trading like what, 25 to 30% implied volatility, right? But when we go to Navidia, right, you are seeing like at least 10% higher in terms of volatility when you look at Navidia over here. Now, so I hope you can see what I'm trying to represent to you. Right? Wow. All right, the market cap of Navidia is smaller than companies like Apple, which are trillion-dollar companies. Okay, but because of the increased volatility, all right, the dollar movements that it's capable of making every single day, right, actually makes it behave almost like a trillion-dollar company. Yeah. All right. Now, it's just an example. Right? If Apple, a trillion-dollar stock, moves by 1% in a day, but Navidia, right, which is a $700 billion stock, moves by 2% in a day, right? Can you see what it represents now? Yeah, all right. Okay, now, so I hope you see my representation over here. And just these two stocks can literally shake, right, the entire tech sector. Okay, and when the tech sector shakes off, right, it's going to ripple through, right, all the other what we call non-defensive stocks. Yeah, all right. Okay, non-defensive stocks. So that could lead, right, a little bit of a shakeout in the markets right now. Okay, now, while I don't expect a full-on crash, okay, I'm not expecting that. Okay, but I do expect some form of correction that is still in store, right, that we are probably not done in the markets right now. Why? Simply because interest rates have yet to stabilize. It is just on the onset of a breakout, right? And every time the interest rate breaks out, right, now it is not good, all right? It has not been good for the markets, right? Now, especially on the first move outside. Yeah, okay. Now, so that's the concern that I have right now, okay? And it is kind of reflected too. Okay, now what do I mean when I say it's kind of reflected too? Right? Because if we now go into the trade trade looks, all right, in terms of the stocks that we have, all right, let's go through all of them. Okay, now we have Verizon, right, where we actually sold. Okay, we collected this premium. Okay, we were assigned the stock at 57.50, right, and we sold the 55 calls last week. Right now, so let's go back and have a look at it today. Right, where are we? Oh man. Right, there we go. All right, now, so where's Verizon trading today? Now, Verizon is trading about $54, all right, and we still have a 15 October call option, right, for 55. All right, now, the premiums have dropped by half the amount. We sold it just 1 week ago for 22 cents, right? Today, it's only worth 13 cents, right now. So I'm just going to continue waiting because there's 2 more weeks before this call option expires, right? So we're going to wait, we're going to hang on. Yeah, okay, now, so no actions on that trade today. Right, let's quickly go to the next one, which is Rio. Right now, Rio Tinto, right, it's also another trade that we were assigned on the put option. So we were assigned for a stock price of 77.20, right, 77.20. So now we actually own Rio Tinto shares, right, at a net, right, net cost basis of how much? Let's measure this out. Right, our stocks, right, we actually paid a net cost of about 75.40, right, $75.40, right, to buying these stocks. Okay, now, so let's see what we have on screen today, shall we? All right, so this is Rio Tinto, right? No, this is not Rio Tinto. Right now, and it still spots over 10% in terms of dividend yield. Right, so that's where it makes me feel very, very comfortable. Right, and if I sell a $75 call, right, at most it's probably going to pay me 10 cents. So there's not a lot of meat. All right, I'd rather keep the upside on the stock, right, because a stock like this could jump up very, very quickly. Right, so I'm just going to hang on to the stock position for now. All right, when the time comes, all right, I will be more than happy to add a call option to my stock. Okay, but not today. Okay, not today. Okay, let's continue. Right now, next one, HIMX. Okay, HIMX. Now, with what's happening now in the tech sector, oops. Yep, it's anticipated over here. We're still down, right? We have a $12 put, right? And the stock right now is 10.50. Okay, our $12 put is about 160 right now. Okay, now the cost basis is about 160. How much did we collect for it? We collected about 119, right? So we are slightly underwater, but we still have 2 weeks to go. So we'll hang on to that trade, okay? Now, next one, we have Colgate Palmolive, right? 77.50 puts, where we collected 160 for 15 of October. All right, now, so let's go. All right, we are under as well. This should be about worth 250, 260 today. All right, and we collected only 160 for it. All right, so we're down by about $1 on this trade. All right, now, so I'm not too worried. At most, I'm going to end up picking up those stocks. I'm okay with that. Yeah, all right, so no management for this trade or position today. Now, next one, CPB. All right, we have a $43 put option, all right, for the 15th of October. All right, we collected 120. So let's go have a look. All right, 15 October, $43 put. All right, it's about $2 today. All right, now let's have a look. We collected 120, so we are a little under as well. So I'm going to continue holding this position. All right, now we had a good close on Kellogg's last week. All right, now let's look at PFE. All right, I wanted to close PFE, all right, before the market opened today. But I think the news that came out on MRK, right, shook up the stock. Something about the oral vaccine or something like that. Right, so it shook up this stock, which is a competitor, right? Okay, so the stock dropped by $1 today. All right, now we have, what was the trade that I have? All right, I have the $44 put for 224. All right, what is it worth today? $44 put, back to square one. Oh man. All right, so no actions on this, okay? All right, so we hold this trade. Now, anybody wants to make a guess? All right, do I intend to add a new trade today? Right, type yes if you think I'm thinking of adding a new stock. Right, type no if you think no, Terence. All right, we're gonna wait. Let me know. What do you think? Should we add or should we not add? All right, congratulations, Andy. All right, good job. All right, but when I saw PFE, all right, I have no intentions to close it. All right, so I'm more than happy with it. In fact, I got it wrong. My apologies. My PFE is all the way to 17 December. I was looking at the wrong expiry. Yeah, all right. So this is definitely a trade I'm holding. So no worries, yeah? Oh, no. Everybody says no, 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 no. Wow. Everybody says no. So maybe I should change my mind then. Should I change my mind? Because I had a stock in mind. I wanted to add a new trade today. Should I change my mind or should I talk about it? How many of you want me to talk about a stock that I'm going to trade today? No, Desmond. All right, I don't build my portfolios around buying put options. All right, portfolio is meant to acquire good companies in the long run. All right, so no. All right, I won't be buying put options over here. I'll be selling. All right, so that's how I've always built my portfolios. All right, Andy, you think that the market has not even spared conservative counters, but that's where you're missing the plot because you have to start looking at the long term. Right? Because when markets are coming down, what's happening? Right? Markets are coming down, fears are going up. So when fears are going up, all right, option premiums are also going higher. They're getting more expensive. All right, okay, now, so here's what I'm going to do. I already planned to get into a stock today, right? And let me share with you, all right, which stock and which position I'm looking at. All right, now today, everyone, I'm going to trade, right, an addiction, right, an addiction. I don't smoke. I don't, perform in this vice, okay, but I love the way the company makes money. Right now, so it pays and it sports about 8% dividend return. Can you see the similarities to Rio Tinto? All right, okay, now this company is Altria. All right, now Altria is the holding, or we call the parent company of Philip Morris. Okay, of Philip Morris. Now, so if you believe in the earning capability of Philip Morris, okay, then right, this is one stock that I'm willing to hold or invest in for the long run. Yeah, okay, for the long run. Okay, Andy. All right, it's not a cannabis. Can you make a difference? What does Philip Morris do? All right, Marlboro. All right, Philip Morris owns Marlboro. Yeah, okay. All right, now, so it is definitely going to be here to stay. All right, and okay, talking about cannabis, yes, they are trying to get into cannabis, right? And it is another vice. It is another form of addiction, right? Which is not going to shy away, right, from tons and tons of legality and tons of lawsuits. But do you think a company, right, like Altria, right, is seasoned enough and their legal team behind their back, right, is capable enough to defend the company? They've been doing it forever, right? Probably since the day they started the company, right? They are by no means, right, a novice when it comes to all these lawsuits, right now. So I'm going to take a position, right? Why? Because I think something didn't go in their favor recently. I'm just going to change back my style back to a candle. All right, okay, now in my charts, all right, back to the price mode. Right now, so we had this big sell-off yesterday, all right, where the stock fell by almost 10%. Yes, it was a 10% drop right now. So I'm going to take advantage of this drop. Let me declare this, okay? I may be catching, right, that falling knife. Okay, understand this? I may be catching that falling knife because this is only the onset. But I'm going to show you how I tackle it right now. Yeah, okay, now. So I'm going to actually take, right, a much longer expiry. Why? Pretty much like what we did with Baidu, if I'm not wrong, or JD.com, right, in our earlier trades. Because I expect that I'm jumping in a little early, right? But I don't want to go through the hassle of looking and looking and looking for the right time and the right entry when I'm managing a portfolio, right? Because if you have joined me every Friday, you would see I dish out a trade in less than 10 minutes and I'll get it done, right? And that's how I manage, all right, a stock portfolio. That means a longer term portfolio where I'm growing, right, for the longer run. Yeah, okay, now. So these are, pretty much portfolios that I'm building, all right, for my kids where I'll hand it over to them. Yeah, okay, now. So I don't want to spend a lot of time on it. Yeah, okay, because these are not trading philosophies, they are investment philosophies. So if I expect that I'm jumping in early, then I'm going to look for longer option expiry. Why? Because it will allow me to ride out, right, the stock continuing to dip before it starts to rebound. Yeah, okay, that's a golden nugget I'm going to give to you. I should not have said it, but here you go. All right, it's already out. All right, now, yes, all right, I'm sorry I cannot address you by person, all right, you are a Facebook user, right, but what you say is right. Yeah, okay, all right, now, so they kind of banned them on the stop and the sale of their e-cigarettes, okay, but, that's not their main staple. Yeah, okay, they're trying to make it their main staple, right, but that's not, their main driver over here of the entire business. Okay, but having said that, do you think they're going to stop there? All right, they're probably going to try to launch an appeal and blah, 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 right, to continue fighting. Yeah, right, so this is going to take a couple of years. Okay, but having said that, okay, now, if you have looked at what Altria has done, right, for a very long time now, right, you would see, okay, why these prices, these valuations, right, actually presents, right, an opportunity, because the high of this company, right, on its heydays, on its best days, right, were almost $80. And we're sitting at almost a 50% drop right now. Can you see? We are about 35 to 40% lower prices, right, from its highest point. Of course, that's when it has not blown money, right, acquiring, right, a very expensive e-cigarette company. They have not spent a lot of money trying to acquire a cannabis stock, right? So these were proven to be kind of like bad investments that a company has made into new arenas, right, over the last couple of years. That's what has been reflected in the stock price. But yet, right, they have stayed profitable, right? Despite all these investments and all these write-offs and stuff like that, they have stayed profitable, and they're still trading at a PE of 18, right? That ain't too bad. Yeah, all right, so I'm going to take into this right now, right? So here's what I'm going to do. Oh, man, the premiums have dropped from where I wanted to sell it for. But I'll still take the trade. I'm still happy. All right, hang on, everyone. All right. Okay. Now, hang on. Okay, so I've closed this trade over here. I've opened this trade, sorry, right? I sold the MO $45 put, right, for January 21st, 2022. All right, now I sold 3 over here, my usual quantity, for a premium of $2.53. Right, so I've done that. All right, so the trade is done, the trade is out. Okay, so I'm selling the $45 put, right? This one over here, right? And I got $2.53 for it. Okay, now, so that order is done, right? It is inside of my account. It is open at my usual trade size. Okay, so let's go do the recording of this trade. Trade 70. Right, Altria. 21st January 2022. Right, the $45 puts. Right, we're doing it today. It's the 1st of October, a new month. Right, and I'm collecting $2.53. Right, now this trade is gonna pay me. Right, hang on, let me cut this out. Right, 110. Right, there we go. All right, now, so this is gonna bring me $759 in cash flow on this trade, right, with an investment capital of $13,500. Now, the $13,500 is allocated to pick up 300 shares, right, which is 3 put options, 300 shares of MO stock at $45 a share. Yeah, okay, now, so that's how I allocate when I sell put options on these Friday live sessions, right? They are cash secured puts, or what I call portfolio puts. Now, if anything happens, I will take the stock position, right, and then try to turn it profitable. Yeah, okay, now that's how we manage it. Now, let's go look at the ROI calculation, shall we? Right now, so this is going to pay us $2.53 on an investment of $45 a share. So this works out to a 5.62% ROI, all right, in a span of 112 days. Now, 112 days is actually 16 weeks in the market. So I'm going to take this divided by 16 and then multiply by 52 weeks to annualize the returns. Now, so this return comes in annualized at about 18.27%, which is not too bad, right? So I'm more than happy with this trade now. Okay, now, so that's it. And after putting on this stock, right, with everything that's going on in the portfolio right now, everything that's going on with the portfolio right now, okay, my portfolio is exposed to $99,000, right? So I'm back to about 90% exposure right now. Okay, so we are on 90% exposure of the entire portfolio, and I just wanted to take advantage of the 10% drop, right, in, right, Philip Morris and Altria yesterday, right? But I like the position of Altria a little bit better, right? Because Philip Morris is Marlboro, right? Altria is the whole holding company itself, right? So I'm in, right? The trade is open. So now all that is done, left to be seen. That's it, right? Left to be seen. All right, now, so how we do this every Friday, we find some of the best managed companies, right, which are profitable, not just now, but like a forever kind of phase, right? So this gives us the big, strong fundamentals to fall back on. And we look for good valuation prices to start selling put options on these stocks and collecting our returns. What are we aiming for, right? For a full cash investment portfolio on every trade. I'm looking to build about a 20% return on a per annum basis. This is year 2 right now. How do we fare in year 1? In case you have just joined us very recently, right? We have performed 17%, right, in our first year together, right? For those of you who have joined us for a really long time now. I thank you for being here once again, right? If you could click the share button and share out these videos, right, and get more people to join us on these Friday sessions, right, I think, right, it will provide them some value as well. Okay, now, so I hope meanwhile, right, in this session, once again, I've added value to all of you. Okay, I'm going to go take my rest right now before 2 boot camps over the next 2 days on the weekends. Okay, now I'll see all of you next Friday, okay? Now, next Friday, let's see what we do on our portfolio once again together. All right, thank you very much once again, and I'll catch all of you really, really soon. Now, for those of you who are already in for the 24-hour October season, I'll see all of you really soon as well. The earnings season is kickstarting, and we are officially closing, right, our final registrations at 2359 tonight. Right? Yes, we're closing it already. Okay, we are near full house over here. Right? So we're closing the season. Right? I'm looking forward to starting the trade. All right, with those of you who are already in. Okay, this is me for now signing off. Thank you very much for joining me once again. All right, and I'll see all of you really, really soon. All right, next week, next Friday. All right, bye for now, everyone.